Now we're going to work a demo example. You should see a link above the link you click to get to this video that has the PDF. You need to download the PDF, work the problem before you watch this video. So if you haven't done that already, just stop the video, go off and do that. You've got to work it first for the learning to really happen. Once you've done that, we'll talk about this one. This one is called Balance Sheet Basics. And what we've got here are two different companies with some missing information, and we're going to fill in the missing information. So I'm just going to add some highlighter here, make it a little easier to see. There's some missing numbers there. For each company, we're going to calculate what's missing, and that's what the requirements are on the right-hand side. So I'm going to give myself a screen with some room to write. Got all the same numbers over here. We're going to try to sort out. And let's start with Andre Company, the first company. You want to notice that for each company, we have ending balances of assets, liabilities, and equities for December 31, 2012. So that's basically the accounting equation, the stuff that's on the balance sheet, the accounting equation at the end of 2012. We have similarly the balances for assets, liabilities, and equities at the end of 2013. Now, yeah, there's some missing values. We're going to calculate those. But those should look very familiar to you because you have learned assets equal liabilities plus equities. So for some of these, you just have to do the math and fill in the blanks. So looking at Andre Company, we've got assets of $20, using really easy numbers here. Liabilities are unknown, so I'll just leave the L in there, and our equities are $7. So if the accounting equation is always balanced, we just solve for the single unknown, which in this case happens to be liabilities or L. Subtract 7 from each side, and that tells us that the liabilities are $13. So 13 is what's going to go right here. 13. Okay? Now let's look at the end of 2013. So we've sort of done the end of 2012, which is the same thing as the beginning of 2013. And now we're going to do the same thing for the end of 2013, except we have a different item missing. So we have assets equal liabilities plus equities. We know assets are $25 and liabilities are $15. Equity is what we're solving for. So 25 minus 15 gives us $10 for equity. So if we've got two of the three, we can always solve for the missing one. It doesn't matter which one it is. Now, the next part gets a little more interesting. So our missing item now is cash dividends. And you're going, well, okay, cash dividends, but that's not part of the accounting equation. No, it's not. What we're really focusing on here is the equity part of the equation, just the equity part. So we know, because we've learned about equity, we know that at the beginning of the year, we have a balance in equity. In this case, it happened to be $7. And at the end of the year, we have a balance in equity that we just figured out, which is $10. How did that change? Well, we need to have our expanded knowledge of the accounting equation to know that. So here's what we have. We have equity, and I'm going to just put beginning as a superscript here. If we start with what we had at the beginning, and we add to that any stock issuances, I'm going to call them SI, that's not Sports Illustrated, and we add to them any net income. Of course, we would subtract if it was net loss, and we subtract any dividends, then we will have our equity at the end of the year. All right? So all we're going to do here is we're going to fill in the numbers. What do we know? Well, equity at the beginning of the year was $7. We know that. It was given. Stock issuances are given right here, $1. Net income is given right here, $5. Dividends, we're going to subtract those. They're unknown, so we'll put a D for dividends, unknown. And our ending equity, we've already figured that out, is $10. So all we've got to do is solve for the missing item. So let's solve it. On this side, we've got 13 minus D equals 10. Right? So 7 plus 1 plus 5. And we want to get that D on one side by itself, so we subtract D from both sides, and that puts a D over here. We subtract 10 from both sides, that gives us 13 minus 10, and that gives us dividends equals $3. So that's what we get for our answer, $3. We need to be able to solve not only the accounting equation, but parts of the accounting equation. And one of those parts is this one right here. Beginning equity plus stock issuances plus net income, or minus net loss, minus dividends equals ending equity. That's very important to know. There's some other things going on you didn't get asked to do in this problem, and that is, for example, what is net income? Well, you should know what net income is. Net income is revenues minus expenses. Not asked that in this particular problem. So let's go back up and solve the next one, which is Breschel Company. So I'll give myself a blank slate here. Breschel Company, we have the same kind of thing going on. We have a missing item here. We have two missing items here. No missing item in the bottom. So we have three missing items again, but they're distributed a little differently. So let's start out with something we know is easy. Let's look at our accounting equation. Assets equal liabilities plus equity. What do we know? Well, assets is unknown, so I'll just leave the A in there. Liabilities are 100. Equities are 50. That means assets equals 150. Okay? We're just solving that accounting equation as we have been doing before. So then we get to the next part and we say, oh yeah, we've got the accounting equation, but it's got two unknowns. We can't really solve two unknowns. So we got to figure out which one of those can we figure out first from something else. Well, it's going to be equity. And it's going to be equity because we know that equation for equity. So let's go back to our thinking and write it out again. Beginning equity plus stock issuances plus net income minus dividends equals ending equity. You may abbreviate it differently, that's fine, but you need to understand that set of relationships. So let's fill in the numbers. What do we have? We have beginning equity up here is 50, so let's fill it in. We have stock issuances of 10. We have net income of 70. We have dividends of 50. And we've got our unknown on one end, right? It's pretty easy. 50 plus 10 is 60. Plus 10 is 130. Minus 50 is 80. So we've got 80 for our ending equity. Not very neat there, but this is the number that goes right here. So we've got 80. So now we're back to this idea. Now we're back to, okay, let's fill in the accounting equation. We've only got one unknown. Assets equal liabilities plus equities. Assets are unknown. Liabilities we're given as 110. Equities we just figured out at the end of the year in 2013 were 80. So that means assets equals 190. So pretty much you can get anything missing and you should be able to solve it. And if you get the case like you did here, where there are two things missing from the accounting equation, then ask yourself, what do I have that will help me solve for one of those? And given what you've learned so far in this chapter, it's usually going to be solve the equity and then back into the other missing item, assets or liabilities.